Good morning, everyone, and welcome to Julius Baer's Moving Markets podcast. It's Thursday, the 29th of January, and my name is Helen Freer. Filling us in on the latest in financial markets today, I'll be speaking first of all to my colleague Lucija Caculovic. And with the record run in precious metals markets, I'm happy to have Carsten Menke back on the show this week to share his latest thoughts there. So that is coming up, but over to you, first of all, Lucija, for the market news. Good morning.
Hi, good morning, Helen.
Let's begin with the biggest story from yesterday, and that was the US Federal Reserve. The Fed left its key overnight lending rate unchanged at 3.5 to 3.75%. What were the main takeaways, Lucija?
The overall message was one of steadiness, but delivered in a very delicate moment for the central bank. So the Fed said the US economy continues to expand at a solid pace, and it highlighted that the unemployment rate has shown some signs of stabilization. But the context really matters here. President Donald Trump recently told CNBC he may have narrowed his search for a new Fed chair to just one candidate. And the Justice Department's ongoing investigation into Chairman Jerome Powell is raising fresh concerns about the Fed's independence.
Powell tried to push back a bit against this noise, though, didn't he?
He did. His press conference focused on flexibility. He stressed that monetary policy is not on a preset course and said the Fed will make decisions meeting by meeting. He also emphasized that the economy is entering 2026 on a firm footing. Growth last year was solid. Inflation is still somewhat elevated, and while job gains remain low, the labor market is not deteriorating further. Now, Treasury yields moved higher after the statement, reflecting a market that read the tone as slightly more upbeat on economic activity.
Let's talk now about US markets. The S&P 500 briefly crossed a major milestone yesterday.
Yes, it did. The S&P 500 moved above 7,000 for the first time ever during the regular session. It happened before the Fed announcement, and even though the index didn't hold that level, it was symbolically a big moment. By the close, the S&P 500 had slipped back to finish little changed. The Dow added just 12 points yesterday, while the Nasdaq rose around 0.2%. Now, markets overall were fairly calm as investors waited for the Fed and for key earnings results after the bell.
And those earnings then arrived. Should we go straight into the tech results from last night? What did we learn?
So, Helen, it was a mixed set. Meta gained around 6% in extended trading after offering a stronger than expected first quarter sales forecast. Investors liked the message on revenue resilience. Microsoft, on the other hand, fell around 6%. Its cloud business slowed a bit in the fiscal second quarter, and the company also issued a softer margin outlook. Now, Tesla shares were up about 2% after beating expectations for the fourth quarter. So we saw a range of reactions, some relief, some disappointment, but still a healthy level of interest across the tech space.
And turning to Europe, where markets closed before the Fed decision. So what did we see here?
European markets had a tough day. The Stoxx 600 ended down 0.7% with all major indices in the red. Earnings dominated the session. ASML was the early star, reporting orders that far exceeded expectations and giving 2026 guidance ahead of estimates. The stock surged almost 6% in early trading and lifted peers with it. But that enthusiasm faded, and ASML finished the day nearly 2% lower. Now, luxury stocks struggled too. LVMH dropped almost 8% despite posting better than expected earnings and achieving a second quarter of organic revenue growth. So the market reaction was harsh.
Now, what about currencies? The dollar saw quite a turnaround yesterday.
Yes, the dollar rebounded after the U.S. Treasury Secretary Scott Bessent dismissed speculation that the U.S. might intervene to support the Japanese yen. When asked whether the US was involved, he said absolutely not. That pushed the dollar index up 0.4% after it had posted its biggest one-day decline since April, the day before.
And commodities were in focus too.
Yeah, that's right. So oil prices rose again after President Trump warned Iran that a massive armada is moving towards the region and urged a nuclear deal. Brent climbed above $69 and US crude traded above 64. Trump's message has raised concerns about potential supply disruptions. Now, gold continued its remarkable run. Spot gold topped $5,500 overnight, and gold, copper, and silver all hit all-time highs. So I'm really curious to hear more on this from Carsten.
Absolutely, so am I. Now, just finally then, I see markets were mixed overnight. Japan, Korea, and Hong Kong were trading higher, while Chinese, Australian, and Indian markets were all slightly lower. But now looking ahead to today, what should investors be watching today, Lucia?
It's a fairly light day. In the US this afternoon, we'll get trade balance data, export numbers, and factory orders for November. And of course, the earnings season is still ongoing, and we will have Apple reporting later today. So that's going to be interesting. Now, when it comes to the US trading session, futures for the S&P and Nasdaq were last trading in the green, while the one for the Dow still struggled a bit. So let's see what the day holds for us.
Very good. Thank you very much, Lucia, for the great roundup this morning.
Thanks for having me, Helen.
And now on to you, Carsten. Good morning.
Good morning, Helen.
The record run in the gold and silver markets has continued this week. Gold is trading at more than $5,500 per ounce, up more than 10% this week. And then silver, again, stealing the show, up 15% to $118 per ounce. What is going on, Carsten?
Well, I would say that the trigger for this rally was again President Trump. So we heard from Lucija before his statements towards Iran, and earlier this week he said he's not concerned about the US dollar's recent decline. So then the dollar weakened even more, in turn pushing up gold and silver prices. The sensitivity of the metal markets to the moves of the US dollar seems to have increased significantly as of late.
Yeah, I was about to say that. The dollar is down a bit more than 3% from this year's highs, while gold and silver are up 28% and 65% year to date. I mean, I find these numbers very hard to comprehend.
Indeed. So clearly the performance is about much more than the dollar's realized decline. I'd say it reflects the increasing concerns about the political power games President Trump is playing, both at home and also abroad, of course, and thus revolves much more around the dollar's potential decline. There's this saying, the dollar is our currency, but your problem, from former Treasury Secretary John Connolly in 1971. And this seems to reflect today's situation very well, at least from the perspective of the precious metal markets. So while the debasement trade seems to be in full swing again in the precious metal markets, we see very little evidence elsewhere, particularly not in the much bigger bond market. And as you know, it does not take much money to move gold and silver prices.
And what about the flows? Who's behind these moves?
Well, screening the flows, we see that physically backed gold products are recording continued inflows since the start of the year. This is in contrast to silver, where such products have been recording outflows lately, potentially signaling some profit taking. That said, also here, the magnitude of the price moves does not seem to be originating in the physical markets in our view. Short-term and speculative futures traders are still in the driving seat, using both established exchanges and increasingly also blockchain-based platforms such as Hyperliquid. Silver has become the third most active market on Hyperliquid, behind only Bitcoin and Ethereum.
Just as you mentioned, blockchain-based platforms, I read an article yesterday saying that the stablecoin issuer Tether is one of the largest gold holders in the world.
Yeah, I read that article as well, and then I looked at the numbers. So in their reserves of the Tether stablecoin, they hold around 130 tons of gold. Plus, they issue Tether Gold, which is a gold-backed stablecoin, which holds another 16 tons. This compares to holdings of more than 35,000 tons for the world's central banks and 4,000 tons for the world's physically backed products. So these are very different dimensions, I'd say. But still, As a single entity, Tether most likely is one of the larger or maybe the largest holders, but their stock seems to be growing rather slowly, allegedly at a rate of 1 ton per week.
Okay, what's the outlook from here then? I guess the question is, can prices continue to rise at this pace?
Well, that's the billion-dollar question, of course. As mentioned before, I don't think fundamental analysis can provide an answer to this anymore. I said that in relation to silver, but increasingly, I think it also applies to gold. Flows dominate fundamentals, which is why technical analysis is better suited than fundamental analysis to assess the markets. And from a technical point of view, we do not see any signs of slowing.
Excellent. Thanks a lot, Carsten. Very good as always to hear your latest thoughts. Thanks for joining me.
Thanks for having me.
So that's it for today. Thanks again to today's guests and to you, our listeners, for tuning in. I hope you enjoyed the show. If you did, then make sure you subscribe if you haven't already. And please join us again tomorrow when I'll be back with more of my colleagues to talk about what is moving markets. Until then, though, have a great day, everyone, and bye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. Please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.